You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to get started. The regular meeting, Town of Branford Board of Finance for August 26, 2024. First on the agenda, I'd like to welcome our new board member, Deborah Conklin. Welcome.
Welcome.
Okay, thanks for participating. Second on the agenda is to approve the minutes of the June 24th meeting.
I'll move it.
Make a motion by Pam.
I'll second it.
Jeff seconded it. Is there discussion? All in favor?
Aye.
Aye. Thank you. Number 3 is citizens communications. Is there anyone from the audience who'd like to address any agenda items on tonight's meeting? You're welcome to do it now. If not, I have one letter that came to my attention, and it's from Peter Semino, who is the president of the Branford Interfaith Housing Corporation. So I'll read this letter dated August 26th. Dear Mr. Mooney, I've been directed by the Board of Directors of the Branford Interfaith Housing Corporation, BRIC, to ask the Board of Finance to consider awarding ARPA funding to BRIC to meet some of the financial challenges of our affordable housing site located at 146 to 190 Ivy Street in Branford. BRIC is a 501c3 organization incorporated in 1988 for the purposes of reducing homelessness and increasing the supply of decent, affordable, and well-managed housing in Branford. The original members of BRIC were religious organizations from Branford, which included Trinity Episcopal, United Methodist, Baha'i Community, First Baptist, Tabor Lutheran, and First Congregational churches. Membership is limited to religious or community organizations. The board of directors is composed of 2 persons from each organization, with the president, vice president, secretary, and treasurer as officers. The current property owned by BRIC consists of 29 affordable housing units. 16 of these units are qualified for state HAP, housing assistance payments, which allows the tenants to pay a percentage of their income towards the rent, while the balance is paid by the HAP program. BRIC is connected to the Connecticut Housing Finance Authority's CHFA because of its past funding towards the preservation, construction, and rehabilitation of the 29 units. CHFA considers the Apartments and Affordable Housing Program, where all of the operating expenses are paid from the collected rents of the units. There are currently no outstanding loans with CHFA. As a affordable housing program, CHFA requires compliance reports, which include audited financial statements, annual budgets, interim quarterly statements of operation, insurance requirements, replacement, maintenance, and reserve requirements, and tenant profile submissions. BRIC has a long-term relationship with the property management, had a long-term relationship with a property management company until the board decided not to renew the contract. Under that prior property management company, their leadership, the company fell behind on submitting reports to the state financial records. Financial audits were late, maintenance of both the exterior and interior of the building diminished, fire losses to 3 units, and delays in repairs causing long-term vacancies, which affected receipts of operating income. The company also fell behind on rent collection and failed to request rent increases for the 16 subsidized unit, which has an impact on operating income. Monthly reports to the board were not submitted consistently, and a general lack of communication prompted the board to move forward with a new company. BRIC engaged Jeff Dow from Dow Realty Company to assume the management of the site. During this transition period, we learned from the property insurance agent that the insurance carrier was no longer willing to insure the property due to the number of losses. Finding a new carrier provided to be a challenge. Anderson Cross Insurance worked to find a carrier willing to offer us a policy. After a 3-month search. A policy was secured, but with a premium 3 times the amount of the previous policy. Dow Realty is working diligently in collecting rents and addressing the various external and interior repairs necessary to keep the site in good condition. We have identified several areas of concern that ARPA funding would help us resolve. 1, electrical service for the site needs to be upgraded. This was known to the previous management company, but funds were not available. 2, overgrown bushes and trees require extensive care. And 3, parking areas and internal roads require patching and replacement. Your consideration in awarding BRIC ARPA funding is greatly appreciated. Respectfully, Peter Semino, President. Okay, that'll be part of the record. Number 4 is to hear presentation from GYL Financial Synergies with regards to the performance of the town of Branford's police pension plan for the quarter ended June 30th, 2024. We're also here about the other post-employment benefits and the volunteer fire incentive plan and the coastal resiliency fund. Welcome, Michael.
Okay. Good evening, all. Nice to see you. We will follow our usual routine where we go through our acronym. I was requested after the last meeting to make it a little bit briefer, so I've done so and cut that back a little bit. But we have, and then we'll go through performance and the rebalancing. So the acronym for the quarter is RIVER, and starting with rates. As everyone's well aware, just about everyone is an armchair Fed watcher these days, and in all likelihood, we are going to see a 25 basis point rate cut next month. We don't anticipate that there'll be a 50 basis point cut, and in fact, we think that probably wouldn't be well received by the market. But as it relates to the pension and the OPEB in particular, the decision that this board made back in the spring and in late last year to add dollars to fixed income, as well as lengthen the duration of the OPEB to more closely match the liability in the short run, has paid off quite handsomely. Just to put it in perspective, at the end of the second quarter, yields on the 10-year Treasury closed at 4.48%. And today they closed at 3.82%, so about a 15% decline in rates. So not only did we lock in some of those higher rates, but we've seen nice appreciation from the bond portfolio in that short period of time. The I is for inflation. Inflation peaked at 9.1% in June of 2022. In the most recent reading, we finally broke below that 3 level and came in at 2.9% for the headline number. So we're getting closer and closer to that kind of magic 2% that the Fed is looking for its long-term average. That's the good news. The bad news continues to be that declining inflation does not mean declining prices. And so a lot of folks do continue to struggle, especially as food prices have been stubbornly high. And broadly across the economy, prices are still about 20% higher than they were pre-COVID. Moving on to the V is for volatility. Probably the best thing we can say about volatility is buckle up, because it's going to continue for the foreseeable future, whether it be wars raging in the Middle East or Eastern Europe, U.S. elections just about 2.5 months away, a tightening labor market, are all sort of potentially conspiring to add to volatility, although the market's been pretty sanguine about it thus far. Will GDP growth slow is probably one of the big questions, and a little bit of an esoteric question, but it really is relevant because it led or was a significant causative factor in the volatility we saw at the beginning of the month, is this the so-called yen carry trade, and folks really don't know exactly how big that is, whether it's all behind us or whether there's the potential for that to percolate again. The E is for economic output, or GDP. That continues to be surprisingly strong. We had a 1.4% number for Q4 of 23, followed by, a 3.4% for Q4 of 23, followed by 1.4 in Q1 of 24, and then Q2 of 24 bounced back up nicely, more so than folks had anticipated, up to 2.8%. So still, from a GDP basis, the economy is still growing at a decent clip, and nothing to indicate that certainly that we're in any sort of recession. Lastly, the R is for rotation. As we're all well aware, the market has had very narrow leadership over the past several years, the Magnificent Seven, the Googles and the Amazons, et cetera, and the NVIDIAs of the world. One thing that's interesting that's happened in August is, in addition to the big decline we had at the beginning of August, which the market very quickly recovered from, market breadth, or the amount of companies that are moving upward, has really expanded, and that's significant, and that's a potentially positive data point, where we had very narrow leadership amongst those big tech names. What's happened is that it's kind of broadened out with the anticipation of lower rates, which tend to be or disproportionately benefit smaller companies, as well as we've seen just the overall breadth of the market. For instance, just two statistics that are noteworthy. On August 8th, there were 11 times as many positives as there were negatives in the broad market, and then about a week and a half later, on August 19th, 90% of multi-cap equities were trading above their 10-day moving average. And now, so if you're kind of a statistician or a watcher of the technical aspects of the market, those are positive signs. So on balance, although we certainly have a lot of volatility headed towards us, and although the unemployment rate has been creeping up, it is still low by historic standards, and the economy continues to move along at a reasonable pace. So with that, let's move on to tab 2 in your book, please. We'll start with the police pension, and I'd like to start on page 5. We see at the top right of page 5 our annualized return at 5.61 since inception, right on par with the policy, which has returned 5.66. That's come with about 7% less volatility, as indicated by the portfolio beta, and that leads to a positive alpha, or value added, at 0.03. In dollars and cents, that translates to a beginning market value on 4/1/03 of $8.3 million. Since that time, there have been net outflows of just under $1.5 million, and returns of $22.42 million, bringing us to the ending value of $29,241,000. Since the end of the quarter, the annual contribution has been made, as well as there having been some nice appreciation in the markets. So total value of the plan has increased by $2.7 million, of which approximately 1.4 of that has been from market movement. And so the value as of Friday's close was $31,682,000. If we turn back to page 2, you can see performance. For the quarter, we were up 0.5% or 51 basis points, slightly ahead of the policy, which returned 43 basis points. For the trailing 1 year, the return was at 9.2%. And we can see for the 3, 5, and 10-year returns consistent with the underlying benchmark. In terms of rebalancing, and you all have 4 spreadsheets that I handed out in front of you. These are values as of the close on Friday. And as we always do, we met with the finance director to discuss the current allocation as well as rebalancing. And you can see, just if you focus in on the gray lines on the Town of Branford Police reallocation, you can see fixed income is currently at 50.6% of the portfolio versus a policy of 52%. Equities at 45.1%. versus a policy of 45%, and cash at 4.3% versus a policy of 3%. So we're a little bit overweight in cash, a little bit underweight in fixed income, and that's consistent with what we've been doing for many years, especially at this time of the year, as cash is reserved. A big chunk of cash is reserved at the beginning of the fiscal year for benefit payments throughout the fiscal year. So no rebalancing recommended for the police pension this evening. Okay.
Any questions on the police pension fund?
I'll move that recommendation, Joe.
Okay, but there is no rebalance. Right. So we.
Right.
So keep it the same, you're saying?
Right, correct, because you got to sign off on the approval, right?
We usually don't, but.
Okay, sorry, I'll take it back.
Yeah, it's only if we're doing something that we.
Okay.
So that's all right.
Okay, so moving on to tab 3, page 6, the OPEB. The OPEB, of course, was initially funded back in 2011, and so we see returns on a relative basis as well as volatility slightly behind the benchmark due to the rather to the dollar cost averaging into the OPEB trust as dollars have been accumulating in the early years. That created a bit of a drag on portfolio. Of course, now the OPEB is fully invested and it has been liability matched. So there's a heavy allocation to fixed income. I believe when we did the calculation, it was about 24 years of OPEB liabilities are matched through the fixed income portfolio. And so the overall volatility of the OPEB trust is about 13% less than that of its benchmark. That's that portfolio beta of 0.87 on the right side of page 6. And that leads to again to a positive alpha at 0.04. In dollars and cents, we see at 7/11 of 2011, the value of the OPEB was just over $4 million. Since that time, approximately $24.5 million in net cash flows. Most of that contributions, although you've been more recently have been paying benefits out of the OPEB trust. In its early years, that was really there were no withdrawals when it was all contributions coming in, and then earnings of $11.3 million, bringing us to an ending value of $39,805,000. If you turn back to a couple of pages to page 2, please. We can see the performance of the OPEB basically unchanged, slightly negative, down 2 basis points for the quarter, owing to the higher allocation to fixed income when rates were spiking a little bit during the second quarter. And for the trailing 1 year, return at 6.91%, on par with its benchmark, which returned 6.96%. And continuing with 3, 5, 10-year, and since inception number performance consistent with the underlying benchmark. Overall, being passively managed with the exception of fixed income, the portfolio continues to perform consistent with its benchmark, and the current allocation, or the current target allocation, just about 30% equities, 70% fixed income. If you were to look at the spreadsheet for the OPEB trust that I handed out earlier this evening, you can see that we are, again, if you're focusing on the gray lines, very close to the policy. We're at 68.8% in fixed income versus 68% for the target, and 31.2% in equities versus the 32% target. So again, no recommendation to rebalance the OPEB. And then lastly, since the end of the quarter, we've seen about $1.9 million in growth, and so the value of the OPEB as of Friday's close was $41,460,000.
So that 1.9 has been appreciation?
Yes, primarily, a little bit from the equities, but primarily from the bonds.
Okay. Questions on OPEB trust? Okay, move on to the next one, fire.
Moving on to fire, tab, I think that's tab 4, page 5. Similar to the pension, of course, similar asset allocation to the pension, just the difference is because of the smaller dollar amounts, we are in a bond index fund rather than a liability matched bond fund. But again, we've seen performance consistent with, slightly behind the benchmark, and although that's come with reduced volatility, about 7% less volatility than the benchmark, and again, just a slightly positive alpha, which is exactly what we would expect because we really don't have the opportunity to earn additional returns since the fire plan is 100% invested in index funds. The only lever we can pull there is really our dollar cost averaging. You can see back on page 2, the return for the quarter was 0.93%, and the return for the trailing 1 year at 10.68%. A little bit of performance lag from both equities as well as fixed income, as well as the high yield fixed income, owing primarily just to the movement of dollars into the plan and a little bit of cash drag when the market was running up, combined with the fact that small fees, but fees nonetheless on the index funds. Since the end of the quarter, The fire plan has appreciated by approximately $77,000, $77,129. There've been $40,000 in contributions, so the total value increase is just about $108,000. And the value of the fire pension as of Friday's close, $1,831,000. We are going to recommend a rebalance of the fire pension today. There is about $40,000 in excess cash, and since very small outflows, we think it makes sense to put that cash to work. So I do recommend action on a full rebalance of the fire pension this evening.
So we want to move that?
I'll move it.
Harry?
I'll second it.
Seconded by Jeff. Discussion? All in favor?
Aye.
Thank you.
Okay, and lastly, turning to tab 5, please. We'll look at the Coastal Resiliency Fund. A much shorter history here, of course. It was first funded in 10 of 21. I'm on page 4 of tab 5. And just as a reminder for the Board of Finance members, as well as for Ms. Conklin, the new member, there are statutory limitations as to how this pool of assets is invested, so it's much more heavily invested in fixed income. That created a drag early on, especially in when we saw in 2022 when rates came up dramatically and we had some tough negative quarters because of that heavy fixed income allocation. That has reversed itself, and we're actually just about doubling the benchmark since inception, albeit these are still relatively small numbers, but the return at 1.44% versus the policy return at 0.72%. Led to a total return over that time period of 4% versus 2% versus the benchmark. And that's come with about 11% less volatility. So again, we have a nice positive alpha or risk-adjusted return for the Coastal Resiliency Fund. Turning back to page 2, in the top blue line, the return for the quarter was 0.89%. For the trailing 1 year, it's 7.9%, and mentioned earlier, 1.44% since inception. Since the end of the quarter, we've also seen appreciation in the CRF, and in addition to that, there was a contribution made. So a contribution of approximately $310,000, and then growth of $88,700, and then our ending value as of Friday was $2,970,000. Again, looking at the rebalancing spreadsheet. We're underweight in fixed income, overweight in cash due to the recent contribution. In consultation with the finance director, we are recommending today to do a partial rebalance, essentially in anticipation of further volatility in the equity markets. We don't necessarily want to be buying stocks today, but we do think it makes sense to get the fixed income dollars invested. So we're recommending taking $250,000 out of cash and adding that to the fixed income portfolio. No other changes recommended for this evening.
Questions? Does somebody want to move it?
I'll move it, Joe.
Moved by Jeff.
I'll second.
Seconded by Deborah. Discussion? All in favor?
Aye.
Thank you. Thank you, Michael.
Okay, thank you.
Take care.
All right. Have a good evening. Enjoy the rest of your summer, everyone.
Thanks.
Okay, thank you.
Same to you. Okay, item number 8 is to meet with the representatives of the Board of Ed pursuant to Section 10153D of the Connecticut General Statutes. Good evening.
I must out on him, that's all.
How are you?
There you go.
Great, how are you?
Good, Chris.
Good evening, Chairman Mooney, members of the Board of Finance. Thank you for inviting us this evening so that we can confer before we begin in earnest on our negotiations with the administrators.
Sure. Thank you. So, for the benefit of the public, this is a statutory requirement that within 30 days prior to the date at which the local or regional boards of ed or or to commence negotiations, they shall meet with the Board of Finance. So that's essentially what we're doing tonight. And with that, we do understand that Pam DeLeese will be continuing, if she so wishes to, on the negotiation team as far as representative from the Board of Finance. I think for now we should go into exec session, and that way we can have some discussion. So I would ask the members of the public to step out of the room for a few minutes while we conduct a executive session, and they need to stop the recording as well.
You gotta have a vote.
Okay, we're going to get restarted, so please take a seat. And to report that we went into executive session and then voted to come out of executive session. Alex, please sit down. Thank you. Number 10 is to hear a request from Corcoran Sunquist Post 83 of the American Legion for ARPA funds to offset lost income opportunities due to the pandemic. Good evening.
Good evening.
Mr. Masada, welcome.
Thank you. And on behalf of Corcoran Sunquist, Post 83 of the American Legion, thank you for hearing our request. For those of you who don't know, my name is Ed Masada. I'm currently the adjutant over at Post 83. You guys got the request that we put in. Basically, looking at what the American Rescue Plan Act guidelines was, one of the items that they pointed out was that it was for building strong and resilient and equitable recovery and making investments in long-term growth and opportunity, but also providing lost income due to what happened during COVID. Some of you may have noticed driving by the post, we're coming to a state of disrepair. And the problem, well, the reason we're not able to address it is because of lack of funding. Our funding was driven by hall rentals during the month, which was a substantial income for us, and we were able to take that and make repairs as necessary in addition to our other operating costs. Since COVID struck, we've gone down, let's say, exponentially. Rentals are very minimal now based on that. Prior to COVID, we were doing just about weekly rentals. It was a very vibrant organization that we were able to rent weekly. And in addition to weekend events, we were also having clubs and organizations would come in and also rent the post. And unfortunately, during COVID, a lot of these clubs and groups were pretty much wiped out. They just ceased to exist. So we looked at what was available to try to get some assistance through the ARPA funding, and made our request as such.
Okay, so we all received a letter from Don Lagones, who was the commander for
Langley, yes, he's the acting commander.
Yes, and Ed's come here to make the presentation. The thought for tonight is to have a conversation and to not take any specific action, but maybe consider it for a future meeting. And the request that was attached had a paving project I'm all set. For approximately $88,000, because you are tax exempt.
Yes.
So $88,000 for a project for paving, and then for siding was also a substantial dollar amount.
Approximately 40,000 we're looking for.
40,000. 40,000?
Yes. Initially, the quote was for 24, but as I explained in the letter, we kind of misquoted on that and didn't look at the inside of the building. We were just looking at the outside of the building. And the way the walls were constructed, in order to make the repairs, we'd also impact the interior walls.
So again, there's not a specific request in here. Obviously, you'd like as much as available, but I think that we will consider this along with the the other letter that came in that I read under correspondence. So I might note that I believe that you were not able to apply when the town had the open ARPA.
Yeah, basically, as bad as it sounds, it's just ignorance on our part. We weren't aware of it and just didn't take advantage of the opportunity.
Okay. Questions from the board on this?
Joe, if I may. Eddie, are you seeking other grants, awards, or from anybody else,
We're
the state?
looking around. There's very few that we qualify for as an organization.
Okay. Thank
And then
you.
we are getting, the rentals are kind of coming back a little bit, but,
Right,
not like they used to be.
thank you.
Okay, Jim, any other comments?
Yeah, I think, as it relates to ARPA and other things, so currently we have roughly about $546,000 left in unallocated ARPA funds. It's hard to believe it's already been a couple years of this. And when we first started, we were updating the board and others about the regulations, and essentially that dollars either have to be spent or committed through a contract or encumbrance purchase order by the end of December. And so one of the things that we'll be looking at hopefully in the next month is, what is our plan for these other ARPA dollars? And, good candidates, in my opinion, would be projects that, maybe we have a bond authorization for, so we could actually reduce the amount of money that we borrow, and then link that to some of the other needs of the town, and probably would be good to discuss that post audit presentation, and then in terms of what our plan is for potentially closing out the ARPA year.
Thanks, Jim. Okay. Thanks, Eddie. We'll get back to you.
Thank you for your consideration.
Okay, thank you. Okay, next is item number 11, to consider and if appropriate pursuant to section 42-1 of the town code, provide a favorable review of a multi-year contract for in-car camera systems with AXON for the police services fleet. The Board of Selectmen unanimously approved a bid waiver request on July 24th, pending the Board of Finance review. Welcome, Chief.
Good evening, everyone. This is a multi-year contract. It's with Axon as the provider of our current body cameras, and this contract will address the needs of our fleet pursuant to state law and our policies. We have to maintain in-car camera systems in all marked vehicles. This will merge into our existing system of evidence.com. That's a platform in the cloud that manages all our files and allows us to share them with our courts and other law enforcement partners, as well as address FOI requests digitally. The 5-year contract is just shy of $300,000, and this has been approved through the Board of Selectmen. It was a price quote that was lower than multiple state contracts that we reviewed, and we are very comfortable with their product, and looks like we'll be with them for many more years.
Thanks, Chief. Questions on this request? If not, I will read
I'll move it.
resolution pursuant to section 42-1 of the code of the town of Branford. The Board of Finance recommends that the Board of Selectmen approve a 5-year agreement with Axon Enterprises Incorporated for in-car camera systems and data cloud services for the police department.
I'll move it.
Moved by Harry,
Second.
seconded by Victor. Discussion? All in favor?
Aye.
Aye. Thanks, Chief. Next is to consider and, if appropriate, approve the following transfer requests from the police services for 2024. From regular wages and salary, $78,266. Purchase services, $4,002. Equipment, $727 for a total of $82,995. Transferring into school guards, $136. Overtime, $72,344. Professional development, $5786. Communications, $3953. Furniture and fixtures, $727, and meals, $49. Chief has provided us with a letter and explaining some of the categories. Anything else you'd like to provide, Chief?
Basically, just the larger one is the overtime. Unfortunately, the vast majority of all of that, at least north of 60%, is staffing replacement. And I will preempt you that I think that we're going to be in the same position moving forward for a few years as we have some staffing changes with some retirements and, again, the struggles we have with getting officers in. So that's that big number there.
Okay, the good thing is it's within your budget, so that's a good thing.
I hope to continue that trend.
Yes, yes. Questions?
I'll move it, Joe.
Moved by Jeff. Second by Pam. Discussion? All in favor?
Aye.
Thanks, Chief.
All right, good evening. Thank you.
Take care. Next, item number 13, to consider if appropriate to approve a transfer request from the Counseling Center for the following: 2024 from property liability into purchase services. We have a letter from,
That was the one we were going to pull.
pardon?
We're going to pull that.
Oh, you're going to pull that one because
That was,
it's not needed.
It's not needed.
Okay, I like that one. Okay. Item number 14, to consider and if appropriate, approve a transfer request from the Building Department for fiscal '24 from contingency $14,724 from uniform clothing $278, office supplies $387 for a total of $15,389. Transferring into regular wages and salaries $57.61, overtime $237. Accumulated sick, $2,711, and consulting services, $6680. Jim, what's our contingency balance?
$1,218,000 and $6.
Thank you. Welcome, Tony.
Good evening, everyone. So if I can address, I think the from is self-explanatory, but the two, I'd like to explain where it's going. The regular wages and salaries, overtime, cumulative sick, is to cover the exiting of our assistant building official. This is part of his vacation that was due, and cumulative sick time, his payout for leaving the town of Branford. Consulting services was called in to fill the assistant building official's shoes and offer aid to the building department while we were down to just one person at one point. We've since hired a new assistant building official, and he's doing very well, I can say.
That's good. Good luck with that. Thank you. Questions on this transfer?
I'll move it, Joe.
Moved by Jeff. Seconded by Deborah. Discussion? All in favor?
Aye.
All right, Tony, thank you.
Thank you. Good night.
Next is item number 15, which is to consider and if appropriate, approve a transfer request from the assessor for fiscal '24. Appraisal services $400, into dues and subscriptions $400.
Yeah,
Are you handling that?
yeah. It's pretty self-explanatory. She sent a letter, and she's talking about the cost of the increase in the subscription for the pricing books, basically.
Right. JD Power subscription. Victor?
I'll move it.
Moved by Victor,
Second.
second by Harry. Discussion? All in favor?
Aye.
Aye. Okay, item number 16 is to consider and if appropriate, approve a transfer request from the fire services for fiscal '24 as follows. From regular salaries and wages, $94,800. From medic, shift, part-time, $44,500. Overtime, $4,011. Overtime, public events, $11,100. Vacation, $8,000. Holiday pay, $17,200. Special detail, $1,000. Educational incentive, $10,200. Stipends, $12,000. Professional development, $5,600. Employment testing, $34,448. Communications, $2,000. And hydrants, $9,000. For a total of $222,859. Transferring into replacement sick, $115,587. Accumulated sick pay, 27,224. Ambulance billing, 22,827. Other purchase services, 11,040. Purchase services, repair and maintenance, 21,129. Medical supplies, 1,756. Furniture and fixtures, 3,732. Memberships, conference and meetings, 1,564. And transfer to Fund 203 for 18,000, for a total of 222,859. Welcome, folks.
Good evening.
Welcome.
How are you?
Good, how you doing?
Good. Yeah, so the,
A lot of numbers here.
yeah, there are a lot of numbers. A lot of the surplus on the top accounts there are related to retirements. So we had a surplus in our wages and salaries. The Medic 3 shift part-time, those were shifts that couldn't be filled. You know, as you know, we operate that every day from 8 a.m. until midnight, so we can't fill every shift all the time. And again, the overtime and related items all come back to the surplus from retirements. We had 2 people retire this year. Down below, you know, where we fell short, again, related to long-term outages due to illnesses, so covering those positions. Ambulance billing, that's actually a positive thing, because if we go over budget with that, they bill on a percentage of our revenue. So in this year's case, we had an estimated revenue of $1.835 million, but we surpassed that by $538,000 to $2.374 million. So calls have increased, generating some more revenue for us, and a lot of the other deficiencies are because of that as well. More calls mean more medical supplies, more wear and tear on the vehicles, so purchase services got hit, the medical supplies got hit, and so forth. So that's kind of where we're at. The bottom line, transfer to Fund 203, that is for our FEMA grant that we were awarded for training. We have a 10% match on that, so those funds were moved to that account to get the match.
Okay, thanks, Chief. Questions from either the Commissioner or the
I'll move it, Joe.
Assistant Chief? Move?
I move it, yes.
Moved by Jeff, second by Deborah.
That was Pam.
Oh, that was Pam. Because I believe Deborah's recusing herself. Yeah, sorry. Okay. Other discussion?
Good thing they have hydrants in their budget.
What's that?
Good thing they have hydrants in their budget.
That helped us.
They got lucky, yeah.
Yeah,
Yeah,
that's always a big question mark every year as to where
absolutely.
that's gonna be.
Yeah. Okay, all in favor?
Aye.
All right.
Sounds good. Just a little heads up, in September, we'll be by to ask for a transfer for the new hires, the contingency to the salary accounts. So we'll try to get on the agenda for that, for the 16 new EMTs. And then we'd like to talk more about apparatus. We should have a firm number for that Engine 9 replacement, that $500,000 was awarded for. We'd come back with more detail when we had them. So
See you in September.
sounds good.
The reason why is because it's taken 3 years to build a truck, but if we buy it now,
Yeah.
we're paying now, we're not paying 3 years from now,
Okay.
which would be another extra 15%, so.
15%?
Yeah, it's 5% every year.
Yeah,
You
yeah.
can just put it right in the
That's-
calendar, it's gonna be
that's
5% every
the
year
way
for
it
new
works.
apparatus, so.
Okay.
Yep,
We'll
okay.
we'll have that
Thank you.
conversation. Thank you.
Thank you.
all.
Have a good evening.
Good evening. Okay, next is number 17, to consider request, and if appropriate, approve a transfer for solid waste and recycling for 2024 from regular salaries and wages, $10,557 into accumulated sick, $10,557. Welcome, Tyler.
Hi, everyone. So this transfer is directly due to a longstanding employee of the transfer station retiring. We had money in regular wages and salaries to vacancies at the time, and it would be a direct transfer.
Okay, questions?
Move it.
Moved by Harry.
Second.
Second by Victor. Discussion? All in favor?
Aye.
All set, thank
Thank
you.
you.
Next is item number 18, to consider and if appropriate, approve a transfer request from general government buildings for the 2024 as follows. From wages, regular wages and salaries, $43.63, uniform clothing, $19.67, purchase services, repair and maintenance, $15,413, office supplies, $800, other supplies, $5,957, meals, supplies, $550, equipment, $38.16, furniture and fixtures, $250, memberships, conference and meetings, $1,200, for a total of $34,316. Going into overtime for $15.26, utilities for $32,323, and fuel oil for $467, for a total of $34,316. Welcome, Brian.
Thank you, Philip. As you can see, the major transfer was for the utilities, and all I can say is that the Eversource, Water Authority, and Southern Connecticut Gas, and our diesel fuel keeps on rising, and unfortunately it was a lot more than expected.
Okay. It's all within your budget, so that's a positive. So, questions on this?
Move it, Joe.
Moved by Jeff, seconded by Deborah. Thank you. Discussion? All in favor?
Aye.
Thank you. Next is to consider and if appropriate, approve a transfer request from the Parks and Recreation Department for 2024 as follows. From contingency, $28,829, regular salaries and wages, $12,525, foot park splash pad, $27,400, foot park basketball court renovations, $24,763, and transfer into accumulated sick of $28,829, overtime of $12,175, uniform clothing allowance $350, and foot park playground $52,163. Alex, how are you?
Good, how are you, Joe?
Good.
Hi, everyone. Congratulations, Deb. I sent a letter forward to you. One of the biggest drivers of it was contingency for $28,829 for a sick payout of an employee back in January. Our union lead maintainer had retired, so that's what that sick payout is. And then also on the foot park splash pad and basketball court renovation, I'm reallocating those dollars for a future project at Foot Park Playground for $52,163, just as a placeholder for now. So when I go in October, November to write the grant, we'll be requesting some more of those dollars. The project's close to, it's about $200,000 altogether. So I'll be asking them for an additional $150,000. They've been pretty good over the past 9 years. It's the last big area that we have to redo. Everything else has been pretty much redone down there over the years. So that's just thinking ahead to reallocate those dollars.
Okay. Questions on the transfer request?
I'll move it, Joe. God bless you.
Moved by
Jeff.
Second by Victor. Discussion? All in favor?
Aye.
Thank you.
Thanks, Alex. Item number 20 is to consider and if appropriate approve a transfer request from Planning and Zoning for the following 2024. Transfer from travel, $850, into advertising, printing and binding, $850. Jim, you're handling this?
Yeah, actually, Harry unfortunately was sick and unable to attend the meeting. I mean, it's a relatively small transfer for the advertising. They had more applications submitted and reviewed during the year according to their statistics.
Got it. I see that in the letter. Any questions on this?
I'll move it.
Moved by Jeff. Second by Harry. Discussion? All in favor?
Aye.
Okay, thank you. Number 21 is to consider if appropriate approve a transfer request from the tax collector for the following 2024 from regular salaries and wages $1160 and postage $74.17 for a total of $8,577, transferring into overtime $1160, state fees and testing, $150, and tax bill printing, $7,267, for a total of $8,577. Welcome, Robert.
Good evening, everyone. Yes, the transfer request is from within our budget. The overtime request was a shortfall from our transfer that we did in June. It was a timing issue. I thought we had all the numbers covered. The billing and printing and processing, again, we ran over our, we were taking it out of postage. That was for additional letters that we sent out with all of our tax bills this year. Just reminding everyone again that we had a post office box change, which every year we find that we have people who save their envelopes from year to year. They would have gone to the Boston address, and that just creates a mess in trying to find those and creating late charges for them. So that was about $1,600 of that. And then the testing was for DMV. That's the process that we use to put what we call put-ons for registrations for folks that are late in paying their taxes, and then releases. So all that is reported into the motor vehicle department.
Gotcha. Thanks, Bob. Questions from this transfer request?
I'll move it.
Moved by Jeff,
I'll second.
seconded by Pam. Discussion? All in favor?
Aye.
Thanks, Bob.
Thank you.
Okay, item number 22, to consider and if appropriate, approve a transfer request for the first selectman for the fiscal '24. First one is from executive, from consulting, $1,875, and advertising, $11,115 for a total of $2,990 into seasonal and part-time, and up to $2,990. The second request is for Branford Cable TV from contingency, $529, and other supplies, $92, for a total of $621, transferring into seasonal and part-time of $529, and subcontracting of $92, for a total of $621. So those are two transfer requests. Jamie, you got?
Yeah, so Joe, under the executive budget, the seasonal part-time help, those positions consist of the positions economic development coordinator as well as the blight officer. The overage is primarily with the, I would say, the blight officer position, who is also at times assists with the zoning and zoning enforcement officer. So that required some additional funding. As you noted, it is all internal. Just quickly go to the Branford Cable Television. You may recall we created a couple budget cycles ago, seasonal part-time help, which typically our main cameraman Henry Pond is now a part-time employee with the town of Branford, but we've been filming some additional meetings which required additional funds for that. Subcontracting there was a meeting that Henry could not cover, and we therefore utilized an employee of BCTV to film that, and so we're paying them as a subcontractor.
Okay. Questions on these two transfers?
I'll move it, Joe.
Been moved by Jeff,
Second.
seconded by Harry. Discussion? All in favor?
Aye.
Thank you. Item number 23 is to consider if appropriate approve a transfer request from the finance director for fiscal '24 for Conservation Commission and for municipal insurance. For conservation, from other supplies, $475, transfer into board clerks, $215, membership conference and meetings, $5, purchase services, $255, for a total of $475. Second transfer is for municipal insurance, from property insurance, $23,000, into insurance damage, $23,000. Jim?
Sure. Okay, the Conservation Commission is a relatively small transfer. They had what appears to be 2 additional meetings as compared to the prior year. And membership and conference and meetings, just a small amount. The purchase services of $255. The board may recall that what we did in the current year's budget, the new budget, is we basically grouped a lot of their purchase services, grounds maintenance, et cetera, and put them in miscellaneous expenses. It's a little easier for a volunteer commission to manage, and the bulk of their expenditures are really related to one event, which is the Earth Day celebration on the green. So, you know, they'll have like some performers, they'll purchase plants and different things, and if you've ever had a chance to go, if the weather's good, it's not a bad event to attend, but that's pretty much where a lot of their money's spent.
Okay, thanks.
And municipal insurance is, you know, this sometimes, some years we have money extra in this account, and some years we have to put money into it. There's a variety of damages and deductibles that are covered under this. You know, generally speaking, they involve motor vehicle accidents. Sometimes there's damage, you know, pipe could break, etc. And also we get sued, and some of the insurance policies have deductibles. So, you know, when you start adding up all those items together, we basically had about $93,000 and change in expenses against a budget of $75,000, and also sometimes we find out about a claim or deductible as we're into the year, so there's a little bit of money in there just in case something small pops up, or somebody produces a bill for a repair to a vehicle that we weren't necessarily aware of. So.
Okay, thanks, Jim. Questions on this request, these 2 requests?
I'll move it, Joe.
Moved by Jeff, seconded by Harry. Discussion? All in favor?
Aye.
Thank you. Number 24 is to discuss a memorandum from the Finance Director with regards to the state and local government securities, SLGS, and to consider and if appropriate to approve a resolution to authorize that account. Jim?
Yep. Okay, actually, it's funny, in the municipal finance world, the state and local government securities are affectionately referred to as slugs. So when next time you're out in your garden and you see slugs, or you're referring to some ne'er-do-well relative of yours, but basically what these are is they're investments that folks invest bond proceeds. And we've been exposed to these type of securities in the past, but we were not a purchaser directly. Maybe it's a little bit of inside baseball, but when a town does a bond refunding, the escrow account gets put in a slug account, and that's typically done by an escrow agent. Now, fast forward to where we are today, we're not doing any refundings because the rates on our debt is actually very attractive compared to where rates are today. But because rates are higher, it presents a different challenge for us. So right now, the yield curve, and you saw this in some of the pension documentation, and the first R of river that Michael was talking about was rates. And so typically we're in a position now where the shorter term part of the curve is higher than the longer term. And the town of Branford, for the most part, per our investment policy, is generally always investing on the shorter end of the curve. And so even though tax-exempt yields are typically lower than taxable yields, we find ourselves in a position where we could be earning more on the bond proceeds than we're actually paying. So that ends up being a problem, and it needs to be tracked over a period of years. One way to alleviate yourselves of that tracking during that period is to set up an account with state and local government securities. And in order to do that, the town has to have agents. And so what this resolution is doing is it's allowing us as an option to basically apply for and set up an account with the U.S. Treasury. So these are securities owned directly through the town and the U.S. Treasury. And so myself, Catherine, and in a pinch, the treasurer would basically be the agents to participate in this program. The reason we're asking for it tonight, because it's going to be a little bit of a learning curve as we navigate, it's an all online process, is because we're going to be planning to do a bond issue in October. So once we get those bond proceeds, we want to find a home for them. And so this is something that typically we wouldn't have considered, given where rates were. Joe and I had a brief conversation. We're probably both, fair to say, dating ourselves on this one, but you had mentioned that at a time what the state of Connecticut had was their own type of account. It was called the Tax Exempt Proceeds Fund.
Right.
And so that was an investment in municipal bonds. So municipal bonds, by definition, would be eligible. But that fund, which was a great idea, closed probably decades ago.
Yeah.
So what bond councils and other folks are looking at is the slug window for the state and local government securities. And we may be one of the early adopters in this, because what I found out today was not too many people are looking at this right now, but I suspect that probably in the next 8 months or so they will be. Yeah. And so basically, we can invest in these things per our investment policy, but in an abundance of caution, we're representing that we're agents of the town, and so having you guys basically assign us as the agents of the town, even though you might think it somewhat makes sense anyway, I think would be a good idea if anyone ever comes back and tries to back test it. Because what we found out is even, and you'll see in the audit report, some things that we get asked about were like, really? And it's like, and so this is a way basically, like we found out with the SAM things, right? Mm-hmm. So again, it's my long-winded way of saying the rate environment has changed. Because of that, we could potentially find ourselves earning arbitrage, and the way to effectively deal with that is to have a strategy where we could use this product as an option.
That's good. I also might note that prior to the '86 tax law change, this didn't matter, so the town was able to borrow at a lower rate, invest at a higher rate, keep the difference, and offset interest costs, which was pretty substantial.
Sounds like a bank.
Yeah.
It was a good deal that the federal government thought they should crack down on. That was a good idea.
So that's right. So with that, I'll read this resolution. Resolve that the Board of Finance authorize the town to invest in bond proceeds in the demand deposit state and local government securities, DDSLGS, of the United States Department of the Treasury, and that the finance director, assistant finance director, and the town treasurer are authorized to establish credentials with the United States Department of the Treasury in order to act as agents of the town for the purposes of making investment in the DDSLGS.
I'll move that resolution.
Moved.
I'll second it.
Seconded by Jeff. Discussion. All in favor?
Aye.
Thank you. Okay, with no other business to come before the board, I'll entertain a motion for adjournment.
So moved.
Been moved.
Second.
Seconded by Deborah. Pam, sorry.
Harry, you're going to have to sit between us.
All in favor? All in favor?
Aye.
Thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.